Sunday, December 18th, 2016, Monaco 64, home of alternative economics and contrarian views. I'd like to talk about whether the financial system is safe yet. And it's related to an article written by former Treasury Secretary Timothy Geithner. He was also president of the New York Fed during the financial crisis of '08. And he wrote an article or a piece on foreignaffairs.com, which is actually the magazine for the Council on Foreign Relations. And you might be thinking, Monaco 64, I thought you're not one of these guys. You're not the enemy. But I have to say, you need to read what the elites are doing and what they're thinking. So his article is entitled, "Are We Safe Yet? How to Manage Financial Crisis" by Timothy F. Geithner. And yeah, these guys, they warn people, but if you don't read their stuff, you won't know about it. And usually most people don't read the foreign affairs or stuff by the CFR. For some reason, I got an email from them offering me a subscription for the whole year for $20. So I thought, why not? Instead of $118, they offered it to me at $20. And it's interesting because in Jim Rickards' latest book, The Road to Ruin, which I'm still reading, I'm on page 60 at the moment, he says, on the back of the book, he says, the next financial crisis is coming, and the elites don't want you to know about it. And I read from the book, he says, since 2014, international monetary agencies have been issuing warnings to a small group of finance ministers, sovereign wealth funds, banks, and private equity funds. The message is simple. The supposed incredible comeback of the last 8 years is artificial. A crisis of even greater proportions is imminent. So I bought this subscription, and then I looked through it, and there's something by Tim Geithner, "Are We Safe Yet?" Then I thought about what Jim Rickards said. So and this was like a speech, because right now it says Timothy Geithner is president of Warburg Pincus, which is like a private equity fund, and was U.S. Treasury Secretary from 2009 to 2013. This essay is adapted from his Per Jacobson lecture, which he delivered at the 2016 annual meeting of the International Monetary Fund and the World Bank Group. So you see, Timothy Geithner, he's part of this financial elite, and he moves from public to private sector. And he gave a speech to, warning the IMF and the World Bank. And the title of his speech was "Are We Safe Yet?" And I read here a little bit from the beginning. It says, and I quote Tim Geithner, "The 2008 financial crisis was the most damaging economic event since the Great Depression for both the United States and much of the global economy. Although the U.S. economy emerged from it more quickly and in better shape than many other economies did, the crisis imposed tragically high costs and left deep economic and political scars. To help prevent another crisis, Congress passed the Dodd-Frank Wall Street Reform and Consumer Protection Act in 2010. These and other reforms have added a considerable margin of safety to the U.S. financial system." Then he goes on to ask the question, but how safe is the system today? And he says the answer is important because although the United States may not face a major crisis anytime soon, it is certain to at some point. And the other thing he says that is really interesting is here. And he goes on to say, taken together, these three dimensions of safety offer reason to worry. Although regulations have reined in banks' risk-taking behavior, they can go only so far. And he goes on to say fiscal and monetary policy are more constrained than they have been for decades. And that's mainly because, the Fed is almost at zero. The balance sheet of the Fed is $4.5 trillion. It's huge, right? And then he says, and the government enjoys even less emergency authority than it did before the crisis. The result is that the U.S. economy is less vulnerable to a modest crisis. That's what I think is interesting, but more vulnerable to an extreme one. So he's basically saying, yeah, we fix things kind of for a moderate crisis, but if we have a similar to '08 crisis or worse, the system is even more vulnerable. And the other thing he says that, helped me, because I didn't know about this. So sometimes it's interesting to listen to these guys. Not that I think he's got great solutions. He doesn't. He doesn't talk about, the inherent fragility of the system because it's based on fiat money. He doesn't, he points out that maturity mismatch is a big problem. Basically, financial institutions borrowing short term and lending long term. He says that's a problem, but it's a necessity. I don't think so, personally. But there is one part of this essay or speech that I think is really interesting and is further towards the end. And he talks about the Fed, because we always think that the Fed can do anything, right? And I read here from Mr. Geithner. He says, the Fed under fire. The Fed has retained some of the instruments and authority that allow it to act as a lender of last resort, including the traditional discount window where banks can borrow money from the Fed to cover temporary liquidity shortages. But because banks play a limited role in U.S. financial system relative to other financial institutions, and I think by that he means, hedge funds, private equity, right? He says, but because banks play a limited role in the U.S. financial system relative to other financial institutions, these conventional bank-centric tools give the Fed less power compared with its counterparts in countries where banks play a larger role. And he goes on to say, this is quite interesting. He says, the result is that the U.S. financial system suffers from a large mismatch between the distribution of the risk of runnable liabilities. Runnable liabilities basically mean that, but the public or investors will have a run on these securities, which are liabilities for the bank, and leave the bank, underwater. And he goes on to say, distribution of the risk of runnable liabilities and the reach of the accompanying safety net, deposit insurance, the discount window, and the Federal Home Loan Banks, a group of government-sponsored banks that provide lending facilities to banks similar to the discount window. The government's lender of last resort facilities cover only banks, even though there are relatively important non-bank institutions that would need such help in a crisis. And he goes on to say, part of the problem is that although the Federal Reserve can lend freely to a solvent bank against essentially everything the bank has, it has very limited power to buy financial assets. It is allowed to purchase only U.S. Treasuries and securities issued by government-sponsored enterprises, whereas other central banks can typically buy a broader class of assets. And he goes on to say, what's more, although the Federal Reserve has the authority to lend to non-bank financial institutions during a crisis, it can do so only when they're close or past the point of no return. So basically, the Fed, he says here, the goal was to make it hard, if not impossible, for the Fed to take the types of action it did when it rescued AIG and helped JP Morgan Chase acquire Bear Stearns. So this is what happened in the last crisis. Congress has changed the rules, and the Fed, is now, as he says, finally, the Fed is now subject to new limits on how much risk it can assume in its lending operations. And it says, in general, the Fed is allowed to lend only to solvent institutions, not insolvent ones. Yeah, and he goes on to say, many within the Fed today believe that in a future crisis, these limits would deter and perhaps prevent the Fed from providing some of the most valuable lending facilities it offered in 2008 and 2009. So there you have it, Tim Geithner. You can't get more of an insider, of an elite financial guy than Tim Geithner, and he's warning the IMF and the World Bank and the readers of this, CFR publication that yes, the U.S. financial system is stable and can withstand like a moderate crisis, but if we have a crisis similar to '08, he actually says the tools that the Fed used to have back then have been removed from it. And the fact that the non-banking financial institutions are not under the Fed's umbrella, and relative to other countries in the US, they're much bigger, makes it even more worrying. So that's Tim Geithner warning, those who want to listen, that we're not safe yet in terms of the US financial system. So if you enjoyed my video, please give me a thumbs up, share it far and wide, subscribe to my channel if you haven't yet. If you'd like to donate to my channel, there's some links below in the description. I accept Bitcoin, BitGold. I got a PayPal account and Patreon. So I'll talk to you later. Have a good rest of the weekend. Bye.